Be uncomfortable because I don't like
Guys, we're
flying.
rolling.
Perfect. I think a flight distance would for me, yeah.
Yeah, me too.
Yeah. Ready, set, real estate.
You did a good job at it, Jess. So we're here today with Mike Jones. Mike Jones works with Sentiment Financial, and he's a mortgage broker. Does a lot of the mortgages for a lot of agents at Century 21. Helped with me personally too. Absolutely nothing but amazing things to say about Mike.
Thank you.
And today I wanted to go over with Jess too about if you're not quite ready to get approved yet for a mortgage, what can you do? Advice you think just in terms of like what you see, etc. I'm just going to give a quick example. For me and Jess, you can elaborate. A lot of times we meet with people and they have their money saved up, like their down payment. They go to get pre-approved and all of a sudden, and they're excited. Like they want to get a house the next week and they can't because there's something off or whatever. And it's like, only if you would have done that maybe, in advance, etc. Right? So.
Or sometimes they have a job, they have good credit, they don't have a down payment, or they have a job and a down payment, they don't have good credit. So a lot of the times they're like, what should I even do right now? Mm-hmm. And I say, if you talk to a mortgage broker, they can go through the process with you, like a pre-approval, right?
Yeah.
Checking your credit, doing whatever, and they can at least tell you what you need to do.
Yeah.
So how does that normally look?
Well, I mean, I think the answer really depends on the reason why they can't get approved, right? So if it's income-based, what can we do? Maybe they don't get to qualify for as much as they want, but based off your income, you can get this. If it's credit, and one thing I always say about credit is a bruise, not a scar. Mm-hmm. So for somebody to say, I had bad credit 10 years ago, it's irrelevant. It's off your credit bureau now, right? So, but having said that, if there's something on a credit report that maybe we can fix, and I'll just give an example. When I say to somebody, how's your credit? The first thing they think of is their repayment automatically. Oh, I pay everything on time. That's great, but that's a portion of your score.
Yeah.
Another big part is, for example, balance to limit ratio. So if you have a $5,000 credit card limit and your balance is $5,000, your score is going to be low.
Yeah.
So these are the types of things where, somebody maybe thinks they can buy a house, they can't, they check their credit, the score's low, you can work with them. But I think regardless of the issue they can't get approved, it always comes back to me is, even if you're going to buy in a year from now, start the process now.
Yeah.
No one has ever said, boy, am I upset that I started the process too early.
Yeah.
There's no such thing. Because we can pull your credit, we can look at the income. You can look at stuff and say, okay, projecting in a year from now, even if you want to buy, assuming the guidelines, and the guidelines for mortgages are ever changing, but assuming the guidelines stay the same, this is what you can afford. It'll give you a target for this is how much we have to save for down payment, give you a rough idea of what the payment's going to be. And sometimes I meet with first-time home buyers and I say, this is what your payment's going to be. So I know you're not going to buy for 6 months. But start putting that aside every single month to get used to that type of a payment, right? So there's lots of different things, depending on, again, why they can't get approved, but start the process early.
Yeah.
And also, too, often people are worried. They're like, well, if I go to talk to a mortgage broker right now to figure out what my situation even is, aren't they going to check my credit? Doesn't that wreck my credit? So what's that?
And I hear that same concern a lot. People are scared about their credit getting checked. And they think, and they're right, if you do check your credit, the score could go down. But credit's there to be checked, right? Like, so if your score is good, it's like saying you have $1,000 in your bank account and you have to spend $2 for something. Like,
right.
It's not. That's what I always thought. It's not a huge hit,
It's
right?
not a huge thing.
I don't think.
If you
I don't know that for sure. But
you're right. But if you get multiple credit inquiries over a short period of time, that'll affect your score. But, and again, when you're dealing with a broker, we check your credit, we can send to multiple lenders. Whereas if you went to different banks yourself and each one of them checks your credit, then that could be an issue.
And the irony too is that if you have your money and you go to get pre-approved and you find out there's an issue with your credit score, well, and say you even go to 4 different places and it hurts your credit score, you're going to build up your credit anyways over the next year. So it's kind of like ironic in a sense because you wouldn't be able to get approved if you didn't do that approval a year ago in advance.
Yeah.
So by you doing that, now you can work on your credit. So don't worry about the hit you're going to take on it. You're going to work on it anyways.
So basically you can tell them, you can say this student loan or this thing is hurting you.
Yeah.
Work with that, come back to me in a year or whatever you think.
Exactly.
And you can actually guide them and tell them exactly what they need to do. Not just tell them, no, you can't get a house right now. You can tell them why.
Yeah, you can tell them exactly why. And to go further, let's say I pull a credit bureau and they have a $10,000 credit card balance, not limit, right?
Yeah.
we have to use 3% of that as a payment. So we have to use $300 a month.
That they're obligated to pay every month. So
Exactly, as far as a liability, where you know I might come back and say, hey, you're pre-approved for $450 mortgage as an example. And they say, I really wanted $5. Well, that extra $300 you're paying on that credit card, if you pay that credit card off, now you qualify for $5. Because the payment's the same, right? Like $100,000 right now is, let's call it $600 a month. You know, give or take, depending where rates are, but roughly, right? So if you get rid of $300 in debt, now you can afford an extra $300, which is the equivalent of $50,000.
And what's an easy way of somebody being able to figure out what they might qualify for based on how much they make? So if someone says they make $50,000, $100,000, you know, combined or whatever.
Yeah. So the easiest way that I say is your income times 4, and this is gross income, not net. So whatever your T4 amount is, times that by 4, and that should be what you qualify. So if you make $100,000, if a couple make $100,000 a year, they should be able to qualify for a $400,000 mortgage. Now there's other outstanding factors like do they have any debts or anything like that. But as just a general rule of thumb, it's an easy thing to go off of.
So let's talk about debt to income for a sec, because as far as I know, you correct me if I'm wrong, debt to income is a ratio, right?
Yeah.
So if you make $100,000 a year and you have 0 debts at all, well, that's great. You're going to really optimize how much you can buy and get approved for. If you add any debt into that equation, you got $10K debt, credit card, truck payments, whatever it is, then it's going to limit how much your purchasing power is, right?
Exactly.
So how much... what is that threshold? I usually tell people 35-40%, but I could be wrong, so I want to refresh you for myself.
No, that's a great question. So actually funny is the amount in which you can go also depends a little bit on the credit. So go back to the credit stuff a little bit, right? So if you have the best score, I believe right now you can go 39 GDS, which is percentage of your income you're spending on the house, property taxes, and to heat the house. And then TDS would be about 44 with the best score. So there's room after the mortgage that you can have some debts and they will come into play.
So it's 44% of your income. You can probably get away with having debt on. Once you're over that, you wouldn't be able to get a mortgage at all, most likely.
Awfully difficult.
Yeah, okay. Like in terms of like normal mortgages.
Exactly. Unless, you know, sometimes if you have more than 20% down, you have a little bit more play as far as what they'll allow, like exception-wise. Less than 20% down, the percentage of an exception is next to 0.
Yeah.
So basically, as long as people have, you know, good credit, are working usually, and have at least 5% down payment, they're in a good spot. But the 5% down payment sometimes needs to be higher depending on their situation with their credit and their income and all that stuff too, right?
Yeah, exactly.
So minimum is 5%, and a lot of people get stuck on that because sometimes people think it's only 5% for first-time home buyers, which isn't true.
Yeah.
And then other people get confused because they're like, well, my friend had to put 10% or 20% down because their situation was different.
Yeah.
Maybe the bank said, we're not happy with your income, but if you put this much down, we will give you a mortgage, right?
For sure, absolutely. And it could be the type of property as well.
Yeah,
right?
a cottage.
Like a cottage would be, you know, actually a cottage you can do with 5% down as long as it's year round.
Oh, okay.
Which is
Right,
funny,
Well,
but
not
you know,
3 season. Interesting.
Triplex, like you can have somebody buy a 3-unit house, live in one of the units, minimum down payment is 10%.
10%, okay.
Whereas a lot of people think it's 20 because it's a rental, but no, if it's part of it's
We could do a whole video just on down payments, because if you think about it, there's like the type of property, there's the purchase price, because if you're over 500, you do have to have more than 5% on that amount. Right? That's like the law.
Unless immediate family's moving in.
Yeah.
No, but still, if you bought for more than 5, the down payment from 0 to 500,000 is 5%.
Yeah,
right?
yeah.
And then above 5, you need 10% up to a million. So if you bought for 7, you would need 25,000 to go from 0 to 5, and then 20,000 to go from 5 to 7.
So 45K plus
45K.
That's another important thing to note as well. It's not 5% on the whole amount, depending on the purchase price.
Yeah.
So if you're buying a $700,000 house, it's not 5% of
the last thing I
700.
want to say about that is, because I'm curious too, when you hit a million, it's 20% on the whole thing, correct?
Yes,
So
20% on the
like
whole.
a price ceiling in the market.
It does,
almost.
absolutely.
Because if you could buy a house at $995, your down payment's way less than when you go 5K higher at a million. Then you have to do all of a sudden 20%, $200K.
I saw some purchases for $999, $999.
Yeah.
Right?
That's so funny.
Because it said
They're
put
like
less down,
huge,
right?
yeah.
And another just important thing, and I'm not sure if you guys see this as well, but closing costs is something that a lot of first-time home buyers kind of, they'll call and say, hey, I have a down payment, I have $25,000, I want to buy for $500. But we're not taking into account that, you're going to have your lawyer cost, you're going to have title insurance, like all the fees associated with actually buying a house, which typically for a first-time home buyer, let's say, is between 1 and 1.5% of the purchase price.
Yeah.
On average.
Maybe, because I mean, it just depends on the situation, but the lawyer usually is like a couple thousand, depending on the situation. Land transfer tax, some first-time home buyers don't pay any of it,
Yeah.
because up to 4,000 is.
I think it's 5 now, isn't it? Or is it still 4?
I believe it's 4.
Is it? Okay.
Yeah, we'll have to check.
But whatever. But still, like some.
Now I'm questioning myself.
We don't know what we're talking about.
Some first-time home buyers though, their fees at the end are like, $300 or $400 for a home inspection, couple thousand for a lawyer, and that's all the money they have to come up with.
Yeah.
And some of them think they have to come up with like 10 or 20,000. So I would definitely talk to a realtor about that. All the mortgage questions, I would talk to a mortgage broker, and don't feel that you're wasting their time, because they're just helping you get to where you need to be. And they're the ones that are going to actually analyze your personal situation. Because I get messages all the time where people are like, hey, Jessica, we have this much, or this is how much I make. Do you think I'm good? And I'm like, there's so much more information. I have no idea.
Yeah.
Your credit would have to be pulled. What hours are you working? Are you permanent full time? Are you even on the books? Like, where did the down payment come from? There's just so much that they're better off to contact a mortgage broker. And I know, like, you have even an online mortgage application where people can fill out some stuff.
Yeah.
And, or they can email or text or whatever.
Absolutely.
And you go through that process with them. And then once they've talked to a mortgage broker and either got their pre-approval or know what's going on, then they can reach out to their realtor. So I had somebody today, they talked to their mortgage agent. They messaged me back and said, this is what he said. And they're going to be working on something for a year, saving up more money or whatever. So we're going to keep in touch over the year until they are ready. But just because they're not ready now doesn't mean that they shouldn't be talking to me or the mortgage broker.
Exactly.
We want to help them
Yeah.
get to where they need to be.
Yeah.
Because they don't know,
I
right?
think people think it's like, oh, okay, if I reach out to Brandon or Jess or Mike, maybe I'm wasting their time because I'm not really ready yet to buy a house. Like, I got some money, like I maybe have what's there, but I don't know, I'm just not ready yet. You answer this, Mike. What's the harm in doing the approval in advance? Is there anything at all?
There's
that's
zero
bad?
harm.
Yeah.
And it's like, no one has ever regretted getting pre-approved earlier than when they wanted to buy.
Yeah.
But I've seen a lot of people go, God, I wish I did this a year ago. I knew this was on my
Because
credit
they
bureau.
get excited,
Yeah.
they've got the money, they go to get in touch, we're all excited, we got the search set up, they're going through the approval, we talk about a few houses, oh, do you hear back with the approval? Yeah, unfortunately, like everything's good, but our credit is a little too low.
Yeah.
And it crushes them.
Exactly. And another a good example is self-employed.
Yeah.
Right? A lot of times, what they claim is well, not a lot of time, what they claim is what we use for their income, right? And then they'll come to apply after they do their taxes or after, and it's like, oh, I wish you claimed a bit more. Cause how much? So, again, for self-employed, you're planning on buying for a year, then know what you want to pay yourself this year in order to qualify, right?
Yeah.
That type of thing.
And what's
So
the... Oh, sorry, go ahead.
I was going to say, it's what's on your T4 that counts, right? 'Cause
Yeah, it's
every lender has the same rules to an extent. They want to see verified documents. Those things are things from the CRA. That's T4s, notice of assessments, pay stubs. You can't get around that.
No, and like the self-employed guidelines differ, and there are products to make it easier for them, but just to straight out qualify, it's based off what they claim.
Yeah.
Is the easiest way to say it, right? So it's helpful for them.
Especially the
Reach out.
contractors and
Exactly,
people trying to avoid
people-
paying tax.
Yeah, and everybody is in a different situation when it comes to mortgages, what they approve for, all that fun stuff, right? What documents you might need might be different from what you need, might be different from what I need when I'm going to get a mortgage. Everyone's different. So I think a lot of people also rely on, and this is, you guys probably see this, but I've been saying this I've been doing this since 2007. And I've been saying this forever, is when you go to buy a house or get a mortgage, all of a sudden your friends, your family, your coworkers are all professional mortgage brokers, professional real estate agents, and they know exactly what rate you should get. And I got 2.79 last year. Well,
And that's the other thing, is people can't compare their situation, because they'll be like, someone messaged me recently and said, like, my friends make the same amount as us and they got a mortgage and we can't. The bank hates us. It's like, no. I don't think they do. There's just something we don't know about your friends, right? There's so many variables like credit rating, like credit history, credit rating, if they're going through bankruptcies, how long they've been at their job, like numerous things, right? It's not black and white. So someone can't come to you and say, my friend makes the same amount as me, why can they get a mortgage and I can't?
Yeah.
You can't really answer that without
And a funny example
diving deep.
is I actually had this is a couple years ago now, where I had a call, and it's like, just for an example, Brandon calls and says, hey, I want to buy a house, and you did a mortgage for Jess. Okay, great. I come back and say, this is what you can afford. And you say, like, we work together, and how can she buy a house for this much, and I can't for that much as well, right? And it's like, Jess has a cosigner, right? But Jess works with Brandon, doesn't say, I have a cosigner, so Brandon thinks that he can't get it. But the only difference is because nobody ever tells people when they get a cosigner.
Right, yeah.
Right?
And that too, there's another thing. Some people have cosigners, or they had a bigger down payment because they were getting gifts from their parents. Like, it's just, there's so much. You always see those memes on Facebook where it's like, I can pay $2,000 a month for rent or whatever, and the bank says I can't get a $1,500 mortgage or whatever. It's like some meme that goes around, but there's more to it. Like, and the bank also, you have to see it from their point of view. They're not going to lend someone $200,000, $300,000, $400,000, $600,000 without diving deep into this stuff. I wouldn't if I had the money to lend and somebody.
2008 in the United States, right? What happened there? That was from mortgage lending that shouldn't have been mortgage lending. You know? So they have to make up these rules, and luckily in our country that there is some strictness to it, because otherwise things would go really bad.
It would be bad if everybody was just getting mortgages.
Like,
Imagine.
Yeah. So let me just carve out kind of a path of what it'd be like for someone then. So I would say, okay, if you're, let's say, a first-time buyer saving up money, you have, say, $20,000 saved up. Because you're probably in this market now, like, you're going to need about 20, because 20 could buy you 5%, so I think that's like around $400K or so. Mm-hmm. There's not really houses less than that, so, and plus you got closing costs and things, right? So if you're close to 20, unless you can save up money really, really quickly, then maybe when you're at 10K, but either way around there. And then I would get in touch with mortgage brokers, so say Mike, and then I go, hey Mike, let's go through the approval process. It's going to go one of two ways. It's going to be yes or no, but it's okay. But at least if it's a yes, well then the next steps, you can go buy a house if you're happy with the budget. If it's a no, then what you do then is, okay, what do I have to do? I have to fix my credit, I have to fix my debt, or just fix my credit.
Yeah.
Okay, so to fix my credit, how long will that take? That'll take me probably 4 or 5 months. Well, how do I do that? Well, that goes from you now, Mike, to maybe like a financial advisor type thing too. So now you can pull in a financial advisor, you have an idea of what it is, how long it takes, and you're still saving up money in the meantime, which is to your benefit.
Yeah.
And that's one way. Another way could just be maybe your income is way too low, and unfortunately you will never be able to qualify for a house at $450 even though you have the money saved, because your income's just not high enough even at zero debts. So what can you do now? Well, then co-signer might be like a solution, but that means you had to talk to someone, they'll co-sign, and that's a serious conversation with mom or dad or uncle or whoever.
Yeah.
So then over that 2-3 months you're building that relationship to get them to co-sign.
Yeah.
Then you go back to Mike, and then you're there, you try it again. And remember, no harm in doing that the entire time. So why not?
Absolutely.
Yeah, I think that's. Would you say that'd be like a good way of going about it or thinking about it?
I'd say for sure. And just my mind spinning as you're saying that too. But when you say financial planner, right? You have $20,000 right now, but you don't want to buy right now. There's things you can do. Put in your RSP, and then when you do your taxes next year, you get money back. Plus, you can pull out your 20, so you can turn that 20 into 20 something, 26, say, right? Like depending. Yeah. And that'll give you more money towards the whole purchase, right? So, yeah, absolutely. And those little things are reasons why, even if you're planning on a year from now, do it now.
Yeah. Mm-hmm. So I would say the biggest takeaway then from all this is just, not even just first time buyer, anyone, go get pre-approved if thinking of getting houses probably in the next 2 years or less. Yeah. If it's like 4 or 5 years out, then maybe it's a little too early. But if it's 2 years or less, go have a chat with Mike Jones or a mortgage broker, go get approved, try it, and then see where it goes.
Yep.
It's going to lead you the right path after that, and you're going to be happy with the outcome.
I agree.
And we also have a link to your mortgage application.
Awesome.
So if anyone wants to message me or Brandon for a link to that, then we'll send it to you. And
Sweet. Perfect.
Thanks.
Let's do it again.
Thanks for coming, Mike.
Yeah, thank you.
Good seeing you.
Thank you.